You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Later part of the decade, it just supply drops off a cliff relative to demand. So who knows how high it could go. But I do think this is going to be a pretty long bull market. I don't think it's going to be a parabolic spike and then fall. It could happen depending on what plays out, but I would like to see a longer term and healthier bull market that rises precipitously for, let's say, 5+ years.
Welcome back to Mining Stock Education. I am your host, Bill Powers. Thank you for tuning in. Well, the focus of today's show will be again on uranium. For some time, we hadn't done too many interviews as it relates to investing in the uranium sector, but we had Daniel Major of GoviX Uranium on recently, and today you're going to be hearing from a uranium newsletter writer. I'm speaking today with Justin Huhn. His website can be found at uraniuminsider.com, and Justin is also at the center of a very vibrant and engaging online investing community found on Twitter. So you can find Justin at Uranium Insider on Twitter as well. With that being said, Justin, welcome to Mining Stock Education. It's your first time. And just a few days ago, we had the U.S. Department of Energy release their long-delayed nuclear fuel working group report. As you perused over this report, what were some of your key takeaways and what's the significance for uranium investors?
Thanks, Bill. Yeah, my pleasure to be here with you today. I've been a longtime fan of your channel, so it's kind of an honor.
Thank you.
So the nuclear fuel working group, finally, this is 2 years, more than 2 years coming since the initial Section 232 petition was filed by Energy Fuels and UR Energy, essentially stating that it was a national security issue that the United States was dependent on majority foreign supplied uranium. And that was pushed off last year in July. The petition was essentially shut down in a way from President Trump. He denied the recommendations from that petition and implemented this nuclear fuel working group that has been ongoing with expected resolution. Every few months, the community generally thinks that we're going to hear about it, and we had essentially given up, and then out of nowhere, it comes out. And so it looks resoundingly positive, in my opinion. It's really pretty profound to see that this type of language and commitments is being used by the U.S. federal government in support of nuclear energy. It's not something that any of us following this sector for a number of years would have dreamed of even 3 years ago. So it's really incredible. The details of it, as far as numbers, dollars, pounds, and all of that, have yet to really be committed upon, but they have said that they are proposing a 17 to 19 million pound purchase program by the government that would happen over a number of years, starting potentially this year. It would be domestically mined uranium being purchased for a strategic stockpile. And there's a number of companies that could benefit from that, primarily the two petitioning companies. But there's also a lot of language in the report that suggests support for nuclear utilities in the United States, support for the deregulated utilities that have to compete with natural gas power, potentially life extensions for existing reactors, and then support for the whole fuel cycle, including conversion and enrichment. There's a number of other things, a proposal that would limit Chinese and Russian imported fabricated fuel, which would support Westinghouse and Framatome. So it's a very overarching report that looks resoundingly positive from what I can tell. I'm very pleased with what I was reading.
And so for the long-term implications and implementation of what's spoken about in this report, it would need, I understand, congressional approval and Trump's reelection. Is that right?
It would at least need congressional approval. And although it's the Trump administration that has been in support of this whole thing, I don't necessarily know that lacking his reelection, this support would disappear. That's kind of up in the air at this point. But yes, I believe the majority, if not the entire list of recommendations, still needs congressional support. It's assumed that most of it will have congressional support. I'm sure there will be some infighting on the details and the numbers, but overall it looks very, very positive from what I can tell.
Do you think the conclusions of this report was kind of baked into the cake, so to speak, that this was the expectation from those that invest in the uranium sector?
I think so, yeah. Yeah, I think so. It was leaked. It was, I believe, in January that there was this $150 million a year program to buy domestic uranium. So that was sort of known by the market that was something that was in the federal budget for 2021. And so that was, essentially included in the report. But we've also understood a number of other intentions by the working group from as early as last fall that were made known from a couple of leaks. So I think it was pretty baked in. I don't know that the market necessarily understands the gravity of, the number one nuclear energy supplier and user of nuclear energy in the world that's essentially been let their uranium industry almost die over the past decade. Showing this sort of support is pretty profound.
Because of this COVID-19 crisis, we've seen a number of mine shutdowns, Kazatomprom, Cameco, Namibia, I understand also the mines there. The government asked for them to be shut down. But with all of those supply cuts, I mean, that kind of overshadows this, though, doesn't it? I mean, is this as significant as what was announced in the previous weeks in terms of supply cuts?
The working group?
Correct. This report.
Is that what you mean?
Yes.
It's yes, but in an entirely different way. It's significant in that, there's been an overhang for the industry for over 2 years now since this petition that's at least had some effect on the normal functioning of the market as far as utilities, entering long-term contracts, not knowing the outcome of this petition. So the fact that this is now essentially over with, or a lot of the questions about what would be recommended and the potential for those to be implemented is now off the table, I think that's going to add a lot of clarity to a number of utilities. So it's significant in that way. And it's significant in that I think that the U.S. equities have a tailwind. It's not a shot in the arm by any means, but just the fact that we're seeing government support for this is definitely significant. The mine closures are more of an acute situation that kind of came out of nowhere. And basically, in my opinion, is it's sort of like a match to a powder keg. We've had a very tight supply-demand situation, a very tight spot market for a while now, and it's just kind of taken this catalyst to really set it off. So that's what we've seen over the past 4 weeks or so. I think it's almost actually pushing 5 weeks since the Cigar Lake closure announcement. Like you mentioned, Kazatomprom being ramping down their production, essentially closing off their production. They're still running fluid through their ISR mines, so it's not like they're actually completely closing up shop, but they're expecting a 2/3 production decline over the course of 3 months. So overall, we're looking at probably at least a 20 million pound supply shock, if not significantly more, if we include the Namibian mines, and we're seeing we're seeing supply interruption in some other mines as well. So it's quite significant.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion, with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com. Justin, as I'm sure you're aware, oil went negative $40 a barrel earlier, about a week ago, and I'm curious. I have no idea what you might say here, but what's the connection between oil and uranium? I mean, did that have any impact on the uranium sector at all?
I think that it has, but sort of in kind of a 90-degree way. Historically, there has been some correlation to the price of oil and the price of uranium, but they're not directly connected. The main way that I think this is going to play out in the way that it affects uranium and nuclear energy in general, especially in the U.S., is that the low oil price is certainly going to impact natural gas production from associated gas. We're seeing wells being shut in. So there's going to be a big shock to the natural gas supply, and natural gas power is kind of the biggest competitor for nuclear energy in the States. So if we see a rising natural gas price, that definitely makes nuclear energy more competitive in the deregulated markets. So I think that it's not directly correlated, but there are some effects that are going to come from it, I believe.
The spot price powered through $30, which seemed to be kind of a barrier for quite some time. As we chat here, my finance app tells me it's at $32 a pound. Any expectations for the remainder of this year in terms of the spot price that you could share with us?
Sure. Yeah, I think I don't think it's going to go up in a straight line, but I expect it to be generally trending upwards for the remainder of the year, even when the mines that are in care and maintenance or temporary shutdown come back online. And I believe right now, I think I saw today the ask was 33.50. We have a very thin market. We know that Cameco has done some buying. They probably have a bit more to do. Orano has been buying. We've got, I believe, utilities finally starting to kind of take notice and pick up some pounds in the spot market. And we've had traders covering. And so I think that we'll probably see some resistance in the high 30s, possibly low 40s. As the price rises, we will see some supply come into the market, not necessarily to manipulate it back down, but just to take advantage of natural market forces. Anytime a commodity rises, you'll see sellers that weren't there before appear. But we don't believe that there's a huge amount of supply that's going to come into the spot market, particularly at a certain price. But I think that we'll see, my general prediction is we should see high 30s, low 40s, kind of at a minimum by the end of the year. And I also think that there's going to be some significant seasonality this year. We haven't had it the past 2 years, and it's pretty reliable. So we have the utilities fiscal year beginning in October. And I believe that we'll see that Q4, Q1 seasonality that should be strong. So I generally kind of see any dips and weakness in the next 6 months or so through Q3 as really good buying opportunities.
Brandon Monroe, I've spoken to about a little over a year ago, and he said there was a $30 psychological barrier that once that's broken through, we'll see a lot more money come into the sector. Do you see that, or do you have any other metric that you're looking for or barrier to break through to where you think a lot of the money that's on the sidelines will start to pay more attention to this sector?
I think I sort of thought the same thing with the $30. It definitely was a psychological barrier, primarily because the rally last year, the year before, that took it up to around that point, just under $30, and it fell back down. So there's been a number of head fakes, and I think that it's going to take some sustaining through that price to really get things moving. And I also think that there's some broad market effects right now, just in the finance market and in just the investing market in general, that could be keeping some larger investments from coming into the space. But we are seeing the bellwether, Cameco and some of the other larger caps like NextGen and some of the funds, Yellow Cake, Uranium Participation, ETFs, getting some decent volume. Cameco has been very strong with volume, strong with an uptrend. That's a really good sign. So it's hard to really say exactly at what price we'll see a flood of institutional money come in. But I think just further positive news as it trickles in, perhaps the nuclear fuel working group might trigger some of that. And if we continue up through the $35 range, I don't think necessarily it's going to be a flood all at once without another catalyst that's very public and really gets out there. I don't know what that could be. But I do think it's going to be more of a trickle in. I don't think that this is necessarily going to be a parabolic market like the last time. It has that potential depending on how the U.S. utilities act in the next 6 to 8 months, let's say. If they come to the table to contract, then we could see more of a healthy market. If they put it off till next year, I think we'll have more of a price spike.
About a month ago in mid-March, we saw the bloodbath in the general equities that spiked low. With that, the resource sector sold off. Gold in particular spiked down, then spiked back up. Uranium equities, I was, even when I saw for the first time before everything spiked low in mid-March, when Energy Fuels broke $1, I was like, wow. And then it went even farther on the spike down. But then the uranium equities came roaring back, especially with the supply cuts that were announced. My expectation is that we will see another sell-off in the general equities, and that the general equities will go lower, at least for a particular period of time. I ask myself, so are people going to go to gold as a safe haven, and therefore the gold stocks will not sell off? The jury's still out for me on that one. But as it relates to the uranium sector, where people don't traditionally look at it like a safe haven buy the way you would gold, do you think the uranium equities could sell off again?
It's certainly possible. I think that the early March sell-off really, it just happened so fast that it was a liquidity crisis that just took everything out. Like there was no safe haven besides being short. And I don't think that we're going to see another liquidity crisis like that, even with another broad market pullback. I see there's a lot of expectation that we're going to see another leg down to retest those lows, perhaps lower. I don't know. I don't really do very well with predicting broad market movements. But in general, I think that uranium has shown a pretty good strength relative to the S&P since the crash, as well as gold. And I think that it depends on, for uranium in particular, and perhaps for gold, it depends on the price movement of the underlying commodity. So if we see the S&P and the Dow down and the uranium spot price continues to climb, it could be somewhat of a safe haven, unless we see another just really hard crash. If the Dow is down 10% in a day again, like it did a few days in March, we could see some liquidity coming out of that market as well, just for a safe haven for cash. So it's hard to say, but in general, the spot market looks like the trend, I think, is going to stick at least for the next month or two before some of these mines potentially come back online. We see maybe a little bit of consolidation, but the potential is there for safe haven.
When you look forward to the uranium bull move that we're expecting here, and I believe we're in the midst of, at least the early stages, what is your expectation in terms of spot price and years of upcycle?
I generally believe that we're going to see the spot price rise and at least hold in the 40s and the term price in the 50s. And the reason that is I believe that that's a price that the big players, so that'd be Cameco, Kazatomprom, Orano, Uranium One, all of these big players can make a decent profit. They can run profitably at that price and still maintain their market share at a price that does not yet incentivize further new greenfield projects to come online, or projects that are suspended, like Langer Heinrich from Paladin, some of the uranium U.S. plays. These projects and the greenfield projects, for the most part, need much higher prices than, let's say, the $50, $55 range for term contracts. So I'm kind of seeing two scenarios. I believe that, like I mentioned before, if the U.S. utilities come in sooner rather than later, then we could see that sort of healthy rise into the $40, $50 range, where it could consolidate for a while. And that could be 6 months to a year, maybe a bit longer, of kind of some sideways action in that price range. And we have a chunk of uranium that's available for term contracting from those players I just mentioned, the big players, that will consume a good chunk of the contracting cycle for a period of time, but it will not provide all of the uranium for this next contracting cycle. So the next leg up, I believe, if we move up in a slower, more healthy way over the next year, the next leg up will take us into that next price range. And I believe that will be in the $70 plus. It's hard to say how high it goes, but I believe we're going to need the $60 to $75 range. The market will need that, let's say, out past 2023, 2024, and beyond. And the later part of the decade, it just, supply drops off a cliff relative to demand. So who knows how high it could go. But I do think this is going to be a pretty long bull market. I don't think it's going to be a parabolic spike and then fall. It could happen depending on what plays out, but I would like to see a longer term and healthier bull market that rises precipitously for, let's say, 5+ years.
Mm-hmm. And is part of that assumption what went into you being so focused on a small aspect of the resource sector?
Yeah, I think so. It really just kind of slapped me in the face a few years ago, the potential for this as an investment and how bludgeoned the market was. Just, it was really attractive for a contrarian bet, and it just kind of stuck. Yeah, I think that we're entering a general commodities bull market that's probably going to last a good part of the decade for a lot of different metals and commodities. But I think that uranium holds the biggest potential, if at least one of the biggest potential for out of all those plays. Just, it's such a small market, and investors remember the last market too. So I think once we have a pretty significant confirmation of that price uptrend, we'll see that money come into this very small market, and usually the equities move in big ways when that happens.
A newcomer to the uranium space is royalty companies, which have been in the gold and precious metal space. What is your thoughts here? You don't have to talk about a specific company, but in general, do you like the idea of royalty companies in the uranium space?
Personally, I'm not really that attracted to the royalty company that I'm more aware of. It's mainly because of the management that's running it, and I'm familiar with the assets that they hold. A number of them are not going to come online for many, many years, if ever. And I think that really their most valuable asset is shares in Yellowcake, which is just a fund that holds physical uranium. And the insiders on that one already made their 10x on the IPO. So I think that was mainly an inside job. And I just think that there's much better options for an investor out there. To invest even in the physical uranium is probably safer from an investment standpoint. And the miners are still even after a 4 or 5 week rally, are so incredibly undervalued. There's some really good companies in this space that hold huge potential. So I'm not that interested personally, but I wouldn't blame anybody for going for it.
Could you just tell us percentage-wise in your own portfolio how you divvy that up amongst development companies, explorers, and producers?
Sure. My own portfolio is probably what would be considered irresponsibly weighted in uranium, but that's mainly because it's something that I feel I understand very thoroughly, so I'm comfortable with that. And amongst uranium, I focus mainly on the developers. I have smaller holdings that are sort of core holdings in the physical funds, and a couple of the larger players, just kind of as a foundation for the portfolio. I'm not as attracted to explorers that have yet to make a discovery. Traditionally, if and when some of those hit some big deposits during a bull market, they can really explode, but it's more of a gamble. There's a couple of explorers that have already hit some really killer intersections, drill intersections, and proving out deposits as we speak that are very undervalued. I like those plays. And then I really like the developers that have a very strong chance at coming into production during the bull market. So they've already got their assets. They've already done some exploration. They've got historical or potentially even 4301, 101 resource estimates on these assets. Some of them are even at PEA stage and looking at production within a few years. I really like those companies, especially at low valuations.
Being heavily invested in the developers, do you expect them to outperform their peers?
Definitely, yeah. There's some really small market cap developers that I'm strongly invested in that should come into production quickly when the price confirms. And I think that there'll be a really, really substantial re-rating of the valuations of these.
You have a background in, your bio says, technical analysis and momentum trading. So what can you share with us about the ebbs and flows of the uranium sector? For somebody listening to us now, they haven't followed the uranium equities for years like you have. What can you tell us about the seasonality within the uranium sector?
The seasonality is pretty reliable. Like I mentioned, it hasn't really happened the past couple of years, but generally speaking, we usually see a rising tide in Q4, Q1, and kind of a retraction in Q2, Q3 year over year. Uranium equities are very, very volatile. Unless you're really good at swing trading, even day trading, I wouldn't recommend trading in and out of these stocks unless you really know what you're doing, because some of the small caps are very illiquid, so they're difficult to trade in and out of, at least right now. So for me, my strategy, even having more of a technical analysis background, is for uranium is just I buy the companies when they're down that I like. So I just have my watch list. I have my positions. I add when I can on weakness, and that's worked out really well for me over the past couple of years. But yeah, I think the technical analysis will really come into play. It helps with entries, but entries are difficult to time. I think it'll come into play when we're farther into this cycle, when it comes to trimming gains on parabolic moves and eventually exiting at some point far down in the future.
Justin, as listeners go to your website, if they're not already familiar with it, UraniumInsider.com, what does that offer, and how are you unique from other newsletter writers?
I think, for my website, on the front page, there's a sign-up form for anyone that would like to join the free newsletter. I send out an email once or twice a month that's just kind of more macro stuff and just sort of thoughts that don't fit into a tweet thread, really. And then I have a premium newsletter where I share my current stock picks, and I keep those newsletter subscribers informed, really as up to date as I can on macro. And that's usually 1 to 2 emails a week. And I update on all of our positions that we track, any company updates, and new trades as they come into play in real time. And I think that my newsletter is different in that I keep the communication lines open, very consistently. So I respond to emails as quickly as I can, usually within 24 hours. And I think that, for some reason, people in the space love to read, and they just absolutely soak up content, which is nice because I like to write. So I find myself writing a lot and just really enjoying keeping on top of the sector and communicating frequently with all of the ebbs and flows of the market. And so far, so good. It's been, the first few months of the year were really painful for uranium in general, but my subscribers, I believe, are up pretty substantially at the moment, and as well as I am. So I think that I offer a unique value just in that frequency of communication and openness.
Thank you, Justin. And you can also follow Justin on Twitter at Uranium Insider. He's got thousands of followers, almost 7,000 followers as we speak on Twitter. And again, he's at the forefront of all uranium conversations online there on the Twitter platform. Justin, I really appreciate you sharing your insights on today's show. Thank you for joining me.
Thanks so much, Bill. It's my pleasure.